Hi guys, thank you for joining our webinar on how to do paperless e-stamping for home loan agreements. There are two house rules before we start. Number one is that this webinar will be of 30 to 40 minutes long and we'll do an open Q&A at the end. So if you have any questions in the meanwhile, you can drop them in the Q&A box or the chat box and we'll take it up during the course of the webinar. And B is that we're going to share the recording of the webinar along with this deck tomorrow in the thank you email. Cool. So here's the agenda for today. First, we're going to discuss the three-step process for calculating e-stamping for home loan agreements. Then we'll show how do you calculate stamp duty digitally. Then we'll show how do you affix it digitally. And then how do you recover e-stamp duty from the customer. And Leegality has been trusted by top leading home loan companies, as you can see on screen, to do their home loan documents like loan agreements, DPN, KFS, and mortgage deeds. So with that, I would like to introduce you with today's hosts. We have Aditya, who leads marketing at Leegality and who will take us to the presentation. And we have Subesh, who leads product marketing at Leegality, who will give us a demo of Leegality stamp duty calculator at the end. So with that, over to you, Aditya.
Thanks, Azima. So stamping, thank you for joining to all the audience. So stamping is probably the most critical compliance step in an home loan document workflow, housing loan document workflow, any property loan document workflow. Without stamping, you basically won't have an enforceable agreement. But often e-stamping or digital stamping or paperless stamping is thought of as a very simple workflow of simply get an e-stamp and affix it on a loan agreement. But this is not quite the full picture, right? Because paying the right stamp duty actually involves three core steps, right? One is calculation of the correct stamp duty. Two is affixing the right e-stamps once you've calculated it. And three is, of course, recovering the cost from the customer. Because remember, stamp duty amounts are significant when it comes to housing loans and property loans in general. Let's cover these one by one. We'll tell you the practical issues surrounding this, as well as giving you clear operational guidance on this, right? First is, of course, calculating stamp duty. So the final stamp duty amount that you pay depends on several factors, like loan ticket size, type of loan, which state, bunch of things, right? Essentially, think of these as various fields or data that you input into a loan transaction. Stamp duty is an output coming out of this, right? Hold this thought of these fields as an input and stamp duty as an output. Hold that thought, we'll come to it in a bit. Calculation, of course, is super important because even a mistake can lead to impounding of the document when you want to enforce it. So what happens is, let's say you have improperly stamped a document, you go to court. You are obviously relying on the agreement to actually enforce the home loan. But if improper stamp duty is paid, you cannot use that agreement as evidence and the court will impound the document. Now, obviously, you would want to unimpound the document because you want to rely on it as evidence. So to unimpound it, you will need to pay a penalty at the sub-registrar, which could be up to 10 times the stamp duty amount. And for a housing or property loan stamp duty, this is significant, right? Because property or housing loans, the stamp duty is usually calculated on a percentage basis. So this can be an insanely high amount. So net, you want to strongly do everything you can to avoid this fine by calculating the right stamp duty. Operationally, so far in paperless journeys, the coding of this logic and calculation usually happens at your end, either with a middleware that you build or with an LOS LMS. You give it to your LOS LMS to do. This is standard industry practice. We've put our poll on how exactly, like, how do you calculate stamp duty? So we want to just understand from the audience, right? Do you do this at your own end? You do this via LOS LMS? Cool. Thank you for your answers. I think most people say they have a calculator built at their LOS LMS end, right? So presumably your LOS LMS takes in the fields. We talked about the fields, remember, like state, loan ticket size, things like that, which determines stamp duty, does a calculation. And once this is done, that is passed on to a software like Leegality. We at Leegality till now, or any other e-sign e-stamp software, would just kind of wash our hands of this and say, please do the calculation at your end. Please do the work to do that at your end. Just give it to us. We will do e-sign and e-stamp for you, right? A simple point solution. But this is a big issue because building your own middleware or doing it via calculator in your LOS LMS is hard, right? Because your LOS LMS has 20 other features they need to build and maintain for you. So this gets added to the queue. So it could take months to actually happen upfront. And if you need to make any edits to it, it could take a lot of time because it's one of many projects that your LOS LMS is working on. Two, if you rely on middleware, you say, okay, I don't want to rely on my LOS LMS, I'll do it on my own. You need to invest internal IT bandwidth on it, right? Taking you away from other priority projects. And three, from our end, from the end of the e-sign software, e-stamp software, you need to actually build and buy multiple workflows for different states, which again increases your costs here as well, right? So all in all, it's quite expensive, it's quite messy, it's quite hard to implement. At Leegality, we are changing this. We are moving beyond just e-sign and e-stamp. We are moving towards the document logic itself, right? We are now giving you the ability to configure and code your own stamp duty rules, your own stamp duty SOPs, and your own stamp duty logic into Leegality itself, right? When a customer takes a loan from you, the stamp duty calculation is done by Leegality itself, and the correct stamp paper is then affixed to the loan agreement, all within Leegality, right? So you do not need to do anything at your end with your LOS, LMS, or a middleware. You simply create the logic on the Leegality dashboard. You can do this in a few minutes and integrate with Leegality once, and you're done, right? The entire logic and orchestration of stamp duty is now done at our end. You do not need to build and maintain it yourself. Here's a detailed look at how our stamp duty calculator works, right? So you sit one time, you configure your stamp duty rules into the calculator. Can be done via the dashboard. It's quite easy. And so whenever a customer case comes up, the calculator looks at the input fields, right? Remember the fields we mentioned in the beginning, right, which determines stamp duty. And based on the data passed to those input fields, it scans your SOP and rules and makes a decision as to what stamp duty to pay, and then executes the actual stamp duty amount on the product. We'll show a proper demo in a few minutes. But before that, I want to come to the second aspect of stamping, right? We've covered calculation. I want to talk about the second aspect of e-stamping, which is affixing the right e-stamps, right? So there are three ways to run stamping for housing loan or property loan agreements. One is physical stamping, which is expensive, annoying, and logistically intensive. I assume everyone on this webinar does not want to do physical stamping. That's why you're here on this webinar. Two is, of course, pre-procured stamps, which are stamps that are procured physically and then digitized and then made available in your inventory. This is great for low finite stamp duty payments, right? Low, very certain payments. But when your housing loan duty usually runs in lakhs, right? Property loan duty usually runs in lakhs. You cannot use this method because you have to put like 50 minimum stamp papers on one document, which it's like practically impossible, right? Which brings us to the third method, right? And this is the only method really viable for housing loans and property loans, which is generating the stamp duty, like generating the stamp paper on the fly based on the amount for that exact amount and affixing it on the paper immediately, right? This is via an inventoryless system like NeSL. So inventoryless stamping works very simply. The stamp amount is passed via the calculator. The stamp is generated then by a provider like NeSL and is then affixed to the document, which is quite simple, right? For this, you need to maintain a wallet at a provider like NeSL's end with balance or it won't work. So it's a prepaid system. We are also incredibly excited to announce, apart from a stamp duty calculator, we will be adding another provider to our inventoryless stamping system, right? A new partnership with SHCL that will deliver inventoryless stamping across key states for you. We are hoping to launch this in a couple of months. So we will keep you posted as and when we do launch it. We've also prepared an evaluation checklist you can use just to round out the second aspect. If you want to build your own digital stamping system or are evaluating purchasing a software for this, right? We'll share the deck with you by Thursday. So you can take this checklist and use it. Now we'll come to the demo in a bit. Just one last thing to cover, right? Which is the last part, which is recovering the stamping cost from the customer. Currently, and this is critical because ultimately you are paying a lot of stamp duty here and you ideally want to recover it from the borrower. So currently what happens in e-stamp flows, just digital flows, is that the lender prepays for stamps in advance, like we mentioned, right? For NeSL, an NeSL system, or even an SHCL system, you need to prepay and maintain a wallet, right? It's a prepaid system of credits. So you prepay for the stamps in advance, and then you try and collect this much later after the agreement has been executed. This gives a lot of scope for the borrower to do things like dispute charges or just create friction, delay payment, and generally just make it an unpleasant, costly experience for you to even just collect that money, right? This is in fact sometimes even harder than the physical process. Because if you think about it, in a physical process, sometimes you just tell the customer, please bring the stamp paper when we're registering and executing the agreement, right? So the digital system here, ironically, has a convenience in terms of affixture and procurement, but in terms of payment, it creates a clear pain point, right? This is why what you need to solve this is actually a payment collect feature integrated into your document workflow itself, right? By this flow, by such a flow, the payment for stamp duty can be collected as a step before the signing of the agreement, as a mandatory necessary step for the borrower to undergo, without which the final agreement cannot be executed, right? A payment collect step. So that's all three things covered. We'll now show everything I just spoke about in a detailed set of demos by Shubhesh, our Director of Product Marketing. All right, we will show you how to calculate stamp duty automatically. We will show you how to affix paperless stamps, and we will show you how to collect payment for stamp duty from your customer in the e-sign document execution workflow itself. So yeah, over to you, Shubhesh.
Thanks a lot, Aditya. Let me just share my screen. Let me know once you can see it. Is it visible?
Yep.
Okay. So what I have here is, so this is the legality dashboard, and this is where you'll configure all your workflows for your home loan agreements. First, I'm going to show you actually how the stamp duty calculator works that we spoke of, and how easy the experience for your sender, or even if you, let's say, do API integration, is going to be. So this, I have this home loan agreement workflow ready with a KFS and loan agreement, and loan agreement obviously needs to be stamped. And this, first we select which state we want to stamp it in. Let's say Kerala, and we enter the amount. So let's say 1,000. I'm just taking 1,000 because it's easier to just see the difference in numbers with a smaller amount as compared to a bigger amount. So I'll click on proceed. Sorry, I forgot to enter the pack name, what this pack of KFS plus loan agreement should be called. I'll click on proceed, and automatically, if I go back, see what happens. This was my state, this was my loan amount. If I go to loan agreement, it automatically calculated that this is the stamp duty I need to pay. Now let's see if I change what happens. So right now it's 30 for a 1,000 rupees loan in Kerala. If I switch to West Bengal and I, let's say, take a 5,000 rupees loan now, and I click on proceed, and ignore the screen for now. I'll go back to show you. Again, now this time we have a West Bengal state. We have 5,000 rupees loan. If you'll see, the value of this amount of stamp has changed to 200. This got automatically calculated, and the correct stamp will get affixed towards the end. I'll show you in just 1 second. So we'll click on proceed. Let's say I want to sign this agreement. I'll click on proceed. So this is my KFS, for example, and this is my loan agreement. I'll click on proceed. My workflow is created. I can see my KFS again once more, and I can see my loan agreement, which this time will come with the e-stamps that we've just done. So if you'll see, we have West Bengal stamps. And if I click on proceed, it will send me an e-sign invite. So this way you've automatically calculated the stamp duty and affixed the correct stamp on its own by simply passing the state plus the loan amount and configuring the logic in the backend. So what is this logic that I've configured? So if you'll see this document here, what I've done is I've just simply written down in plain language what the logic of my stamp duty calculation is. My stamp duty depends on a percentage of the loan amount. So I've just put that formula here, and here I've said the formula in this, the X depends on the state. If it is Kerala, I need to pay 3% stamp duty. So X will be 3. If it is Andhra Pradesh, it will be 2. If it is West Bengal, 4. Odisha, 3. Goa, 5. Maharashtra, 3. Karnataka, 4. Gujarat, 5. Similarly, whichever state you are doing home loans in, you can just add it similarly in a doc, and you just, so this way there is clarity on what you need. Then you just run it through any AI with the set of instructions we've made, and you'll get a rule. So this is the rule, and I'll show you now what you do with this. So I'll again go back to the dashboard. This time I'm going to edit this to show you exactly where this rule sits and what we need to do. So these are two custom fields we've added for state and loan amount. These are the ones which help you calculate the stamp duty. So I'll go to this thing. If you see in the middle, what we call this is a rule engine. Rule engine is basically you're giving a set of instructions to the workflow, and workflow, every time it runs, it's going to follow those rules. In this case, it's a calculation, or rather logic, of how the stamp duty needs to be calculated and then affixed. So I've already set this rule. So the same rule, I've just copy pasted it entirely in this rule window. And I've set it, as soon as I click on create document, this rule should execute and the correct amount of stamps should get affixed on the loan agreement. So now what is the experience like for the signer whenever they get this agreement? So this was my agreement that I just created. I'm going to copy the URL for this, and I'm going to sign this live in front of you. So as soon as the person gets the link, or rather the borrower gets the link, they can see firstly the KFS, then they'll see the fully stamped loan agreement, then they can do the e-sign. For e-signing, you'll have to enter the OTP. This OTP, by the way, is completely optional. You can choose to have it, you can choose to ignore it. You give your e-sign consent for the Aadhaar e-sign. So first we're e-signing the KFS. For this, I'll have to enter my Aadhaar number. By the way, if you would have noticed, we've not redirected to an Aadhaar ESP. Instead, we've opened the Aadhaar ESP of CDSL within our eSign interface itself. That's one of the newer features that we've launched, so that people do not move outside of a single signing session, which kind of led to a lot of queries from people. Oh, why are we on a new website? What is this CDSL? What is this protein? So that issue and that query from your customer is no longer a consideration factor in this. So now I've already signed the KFS. Now I'm going to e-sign the loan agreement. And let's say if CDSL wasn't working, I'll just have to refresh this, and it e-signing happens. So I've e-signed both the documents, and they've come to me on my email. This is my loan agreement.
Vash, I think your screen is stuck.
Oh.
And we lost you for about 30 seconds. Now I can see your screen.
Okay, some Zoom issue it seems. Okay, so I was just showing you the signing journey. I'm not too sure where I lost all of you. I'll quickly do a recap of it. So first, now what I'm going to show you is something different. I'm going to show you what a how smooth the home loan journey can look like with Leegality. Your customers are going to come to you and they're going to fill the application first, right? So let's say you'll collect their number, you'll collect the name, other information. And what I have right here, right in front of your screen right now, is this stuff like a mock interface for home loans, not like the actual product, just to show you what that integrated flow is going to look like. Then after this, I'm going to show you the calculator again, because I'm not sure where my issues with Zoom started. So as soon as you collect their information, you'll be asked to collect consent to process this information, which is in compliance with the new DPTP laws of India. You'll do the KYC, and then you'll start further process of sanction, mortgage, DP, and whatever documents you want to execute. But essentially, it has to feel as smooth as this did right now. Like, it was literally like few clicks, and it may seem like this is not very relevant. Home loan has way more documents than a KFS and a loan agreement. That is all true, but essentially, the end outcome and the end flow for both your agent and the borrower has to feel this smooth. Okay, so I've gotten the KFS invite. You can send it to WhatsApp also. I have received it on my WhatsApp also. This is my KFS. I can do a quick sign on this because I don't really need to do another resign on the KFS, right? So KFS signing should be as quick as this. 2 steps and you're done. Then loan agreements. Invite for that has also come as on a single click. Invite has come on my email and my WhatsApp. If you want, you can also open it within your agent's tab or device, whichever they use. So this is a fully stamped loan agreement. I'll click on proceed. This OTP is optional. If you want, you can keep. If you don't want, you can choose not to keep. If you want, you can capture their location. You can do liveliness checks. Even for a journey like home loan, wherein there are multiple visits, you would want to ensure the person who applied is the one who's signing loan agreement. So you can also do face match, wherein you capture this face and match it to the photo that you captured during KYC. So that's also possible. Right now, what I did was like a simple liveliness check. This blocks a situation wherein if I'm not there in person and somebody tries to put my photo in front of the camera, the system will not accept it. So I'll click on proceed. Now I get the options to e-sign. You can do via Aadhaar e-sign, via OTP, via biometric iris, or face, whichever you want. I'm going to do via OTP. I'll give my e-sign consent. And then the Aadhaar e-sign ASP page will load. Just give it a second. So it's going to take like a minute or so. Mostly because like it's been raining in Delhi and network has been a little crazy here. Cool. So I've been redirected to Protein this time. And I'll enter my Aadhaar number here. Cool. So this got e-signed. Now, how do we set this up? To set this up, you'll have to log into your Leegality dashboard. Just give me a second. I'll log into my dashboard. And when you log into your dashboard, you'll have to configure a workflow for this. And that workflow should have the logic of your stamp duty calculations inbuilt. I'll share my screen again with the dashboard. Is it visible?
Yes.
Okay. So I'll show you the calculator again. So the flow that I just showed, to do that, you'll have to configure a workflow, and this workflow should have that stamp duty calculator. Just to recap the demo so far, because it's a bit of a broken demo, and apologies for that. So in this demo, I've already configured a KFS, or rather the workflow, I've already configured a KFS and a loan agreement. In loan agreement, I've fixed the loan agreement template, and I've told it we need stamps in Delhi, because or stamp group will change basis whatever state you want to do stamping in, but you have to set some state. So this will change basis whatever state we pick on the front end, and you enter the amount, and this amount will also get calculated. Let's say it's ₹1,000 loan, and ₹1,000 you have to pay 3% of that. So this amount will be 3% of 1,000 in Delhi, for example, and Delhi, and this amount will get automatically calculated. So how does that happen? So for that, you go to this rule engine, you make this stamp duty calculator, you click on edit, and you just enter this code snippet like this, which can be edited by the business teams themselves on this dashboard. You can make edits to this code directly. And how do you make this code? You just lay down your business logic on a document, as I've done here. It's like fairly simple, fairly straightforward. And you then just run it with a set of instructions we've made, and it gives you a rule like this. And all you have to do is you just need to copy paste this rule in the legality rule engine. And I'll quickly just show you rule stamp duty calculator in action again before we close the demo. So let's say we want to do it in Karnataka for ₹1,000. We'll click on proceed, and coming back to that document, if you'll see, the amount is automatically there calculated as 40, because we had put if it is Karnataka, it should be 4%. So yeah, that brings the end to this demo. I hope you all found this useful. If you want to see this live, and if you want personalized demos, please reach out to us. Anything else you want me to show, Aditya?
Thanks, Shubhesh. No, we've received 3 questions. I think 3 product-related questions, so we'll take it up now. One is, can we reuse the stamp duty of the same customer or loan if e-sign fails after purchasing the stamp paper or paying the stamp duty? So with our current system, which is a pre-procured system, yes, if the e-sign fails, you get the stamp paper back. With the SHCL, with the NeSL system, no, because NeSL generates the stamp paper immediately after the data is passed, even before the sign. So there you cannot get a refund. With our SHCL system, as and when we launch it in the next couple of months, we will update you on this feature. The second question is, can we do a liveliness check first if customer signs through NeSL? If you use our NeSL hybrid flow, for that you need to seek permission from NeSL to do stamping via NeSL, but the rest of the workflow via legality system, then yes, you can do a liveliness check first before NeSL. So we do that with some clients where they use our NeSL hybrid flow. Third is the payment gateway API your API or our API rather, right? The payment gateway would be your payment gateway. The money would go into your account. It would not, legality does not store money for you. It is not our payment gateway. It will be your payment gateway. So those are the questions we've received in chat. Do ask more if there are any. Just quick sum up, we at Leegality run products that make compliance processes easier, namely document processes, as well as a new product, Consent In, which helps with DP workflows. If you can go to the next slide. Our Bharat stamp system, right? We've been running a pre-procured Bharat stamp system, has processed and affixed more than 1.5 crore e-stamps for more than 300 companies across 31 states and union territories. This is a mix of our in-house digital stamping. This is a mix of our NeSL service. And this is also a mix of our digital revenue stamping service, the first in India. If you can go to the next slide. As I also mentioned, we are launching Leegality paperless SHCL system soon. When we do launch it, do poll your answer. We will launch a poll whether you would be one of the first to test it out. If you would like to be one of the first to actually test and run this system. And we will get in touch with you when you're about to launch it. All right, thanks. Yep, and with that, do ask more questions. And of course, we do comply with all Indian stamping laws and all operational needs from our checklist here, or that we gave earlier. And yeah, if you want more updates from us, case studies, emails, product updates, and things like that, do scan and sign up for our WhatsApp and email updates facility, as and when we do maximum once a week, right? Not more than that, sometimes less, with just relevant regulatory updates, latest product updates, and case studies from other lenders using Leegality. So do scan and sign up. With that, we're done with the webinar. Do let me know if there are any other questions. You can also raise your hand and we will give you mic access, and you can also ask questions there. Otherwise, you can drop your questions in chat or the Q&A box below. Sure, we've received a connection request in chat. We will connect with you. Thank you. Great. So if there are no more questions, we'll end the webinar now. Have a great rest of the week, and we'll share the recording with you by Thursday. So ending the webinar now. Thank you all so much for attending.